Hi, welcome to Maltbie's Minute on the Market. Happy holidays, Merry Christmas. As we're looking to close the books, thankfully, on 2022. What can be said positively about 2022? Well, we can say that the free money era has ended for the time being, that the risk-free rate of return has been restored, and that we're working towards a more normalized alternative in the bond market and yields that provide real returns over inflation over the long term. Those are good things. But let's jump into our report, starting with our indicators for the month of December. And here we go. We have a bearish score of sub 50, 50 being neutral. We're at 36. Very negative score. Market sentiment is negative. The technicals of the market have eroded to go negative recently. Liquidity is neutral. Valuation is neutral. Earnings momentum is negative. And monetary indicators, the Fed obviously, very tight and negative. So that is the two rules that come out of that. Don't fight the Fed and don't fight the tape. And that's still where we are. We have to be patient. Now, will it be the Grinch? We found out last week that it will be the Grinch again. Chairman Powell has decided with his merry men and women that rates need to go higher yet still. And their forecast for next year, although they're not supported by the declining data that's coming in, portend towards even higher rates. And that disappointed the market and choked off the possible Santa Claus rally. So what are we talking about here? Well, the data is turning positive. The supply chain, energy, and agricultural inputs are declining rapidly. Margins look like they could hold up better than expected. The Baltic Dry Index, an indicator for global shipping costs, is down 30% from the mid-year peak. The Goldman Sachs Commodity Index is down 20%, and the Agricultural Index is down 15%. So you can see that a lot of the impetus that causes inflation is coming off and declining. Net profit margins are holding up nicely, 12% above the 10-year average of 10. Wage pressure is declining. The Consumer Price Index for urban wage earners decreased 2% in November. Furthermore, the service costs are declining. The medical care index fell 0.5%, and the hospital-related service and prescription drugs also declined 0.3 and 0.2. So the data is declining. We just had a report. One of the Fed's favorite, the PCE, was lower, and it would portend towards declining interest rates. The core PCE came in at plus 1% month to month and 4.7% year over year, declining rapidly. If we mark to market the shelter costs, that number I believe would be negative, but that's not the way they count it. Now, let's look at where we are and where we could be in terms of bear market, bull market. Since 1920, the average bull market has averaged an upside of 468% with a duration of 8.9 years. The average bear market down 41% in 1.4 years. How's it been? What's the history with Powell? Well, he stepped in 2018. We had the Christmas massacre down 20%. The 2019 rebound bull market up 45%, the COVID bear down 35%, and the 2021 bull recovery up 77%. Now this year, the S&P from peak to trough down 26%. If we look at the average duration of how much time, how much lower, that would take the average of down 41%, would take us to 2840, and that would occur in April. Other asset classes have had it worse, and we think they could be fully discounting the downside, or nearly 95% of it. That would be the micro and small cap indices. The micro, 1.9 months in the bear market, down 38%. Key valuations dramatically, telling two stories here. The S&P at its 10-year average trading at about 17, 18 times, but the Singular Research, our coverage list, trades 10 times, estimated earnings, a 50% discount. The Singular Research covers list in '09 bounced 41% 12 months after the bear market bottom and increased another 285% from that level out to 2014. It looks, I think, there is light at the end of the tunnel for patient investors. And as we work through this, we want to offer you a peek to do some homework at some compelling opportunities. We are offering a 30-day trial. Visit singularresearch.com and sign up for that and start looking at some of these ideas supported by our research that we feel will provide you the upside in the next 12 to 18 months to make a real difference. I'm Robert Maltbie. Better days, light at the end of the tunnel in 2023. Patience is the key right now. Thank you and Happy New Year.